Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China RES MIXC interim report. China Resources MIXC Lifestyle Services Limited provides a diverse range of businesses and services in the People's Republic of China. The company operates through three main segments: commercial management business, property management business, and ecosystem business. The key services offered by the company include commercial management services for shopping malls and office buildings, property management services for residential communities, tenant sourcing and operation, venue leasing and event support services, eco-services such as cell phone cosmetics and cultural operations, community lifestyle services, brokerage and asset management services. These services cater to various clients, including property owners, residents, businesses, and individuals. The company's comprehensive range of services aims to provide a seamless experience for its customers, from pre-opening management to community lifestyle services. The significant increase in China Resources MIXC stock price can be attributed to several key factors. The company's strong interim results for HON 2025, which showed a 6.5% revenue growth and a 16.3% gross profit increase, were a major contributor. Additionally, the solid annual results for FY 2024, with a 15.4% revenue growth and a 20.1% core net profit increase, further reinforced the company's position as a leading commercial operator. The company's earnings growth outpacing its competitors, with a 24% increase in the previous fiscal year and a 110% increase in earnings per share over 3 years, also boosted investor confidence. Furthermore, positive analyst sentiment, including buy ratings from reputable firms like First Shanghai, likely contributed to the stock price surge. These financial achievements and market sentiment collectively propelled China Resources MIXC Lifestyle Services stock price to increase by over 53.91% in the past year, making it a notable performer in the market. The primary drivers of revenue growth or decline can be summarized into several key factors. Revenue growth is primarily driven by consumption expenditure, retail sales in shopping malls, and rental income from property owners. The company's steady expansion in the property management business, new contracted GFA, market expansion, and acquisition of urban public space projects have also contributed to its revenue growth. Additionally, the enhancement of full-chain operational capability in urban space business has improved customer satisfaction and collection rates. On the other hand, revenue decline is primarily driven by insufficient demand in household consumption and intensifying industry competition. The reduction in land acquisition project areas, downward pressure on unit prices of pre-delivery businesses, and decrease in interest income due to decline in macro market interest rates have also contributed to the decline in revenue. Net income and profit margins of the company have shown a significant improvement over the past year. Net income has increased by 16.3% from RMB 442,622 in 2024 to 2025, with an even higher growth rate of 18.5% compared to the previous year. This increase can be attributed to the rise in retail sales and rental income, which grew by 21.1% and 17.2% respectively. Profit margins have also seen a notable improvement, increasing by 3.1 percentage points from 2024 to 2025. The operating profit margin from property owners has risen by 0.4 percentage points year-over-year, while the gross profit margin has reached 37.1%, an increase of 3.1 percentage points. These changes indicate a more efficient business operation and better financial management, contributing to the company's improved net income and profit margins. The company's financial performance indicates a decline in its ability to generate positive operating cash flow. The data from page 77 and 80 confirm that the net current assets decreased significantly from 2024 to 2025, resulting in a negative operating cash flow of RMB 1,515,329. This suggests that the company is struggling to maintain a stable financial position, indicating a need for improvement in its operational efficiency. The company's debt level and interest expenses have undergone significant changes. Specifically, the short-term or variable lease payments decreased by RMB 8,451,000, indicating a reduction in financial obligations. Additionally, interest expenses also saw a notable decrease from RMB 1,163,000 to RMB 951,000, suggesting improved financial management and reduced costs. The company's financial performance reveals a mixed picture across different segments and regions. On the positive side, the commercial management business and ecosystem business showed remarkable growth, with revenue increases of 69.3% and 100%, respectively. The office building segment also performed well, with a 4.5% increase in revenue compared to last year. In contrast, several segments struggled. The property management business saw declines in revenue growth for community space, -1.8%, and value-added services to non-property owners, -38.5%. Office buildings and CR land experienced significant decreases in revenue, at RM 120 million each. Additionally, CR Group and third-party developers suffered a RM 26 million decrease. Urban space was a bright spot, with a 15.1% increase in revenue compared to last year. However, value-added services to property owners saw a disappointing 32.7% decline in revenue. Overall, the company's financial performance highlights areas of strength and weakness that require attention. Management is optimistic about the company's outlook, citing significant growth in the commercial management business due to digitalization strategies and cost optimization. The 8.6% increase in net profit for the 6 months ended June 2025 has also been met with satisfaction. Looking ahead, the company plans to invest in strategic acquisitions, particularly in property management and commercial operational businesses, aiming to fully utilize the net proceeds by December 2027. There were no notable acquisitions or divestitures in this period, indicating a stable financial strategy with minimal changes to the company's assets and investments. The company has a history of paying dividends, as confirmed by multiple pages within its financial summary. The evidence includes explicit statements such as paid dividends. Yes, page 7, and detailed information on dividend payments in 2025 and 2024, pages 72, 76, 80. Additionally, the company lists specific dividend amounts for various periods, including final and special dividends, page 108. This demonstrates a consistent practice of distributing profits to shareholders through dividend payments. That concludes the financial summary for China RES MIXC. Feel free to comment below, and I will be happy to answer them when possible.